Hello, buenos dias to everyone. Welcome to the weekly mentoring video for Monday, 28th of September 2020. Of course, first of all, I need to bring the disclaimer before we move on to the contents of this video. If you agree and understand this, we can actually continue. And let's do that. I have very interesting and special agenda for today. Last week was pretty crazy, bumpy, jumpy ride on the stock market. S&P 500 was going down like crazy, and it seems like today we open high with a gap up. And I will show you some things I've done to the portfolio. And so special agenda for today is not so special things, is portfolio management. So we will go through the portfolio, look at the any pain points, where we're making money, where we're losing money. The special kind of thing that I'm going to talk about today is around ExxonMobil. So basically, I will show you how to use a synthetic short. So this is another option trading strategy that you may use in your trades. I didn't present that ever yet, not even in my Discover Option Trading course. So you've seen synthetic long maybe, but synthetic short is something new. And I used this to pause losses on ExxonMobil was going really down quickly, and I said, okay, if it passes the level of 35, I need to manage it, and of the price, and it did. So I put a synthetic short on it to limit the losses, basically pause them, and I will show you how to do this. First of all, let's have a look at our profit losses overall year to date. You see, actually, we didn't lose or win much. We kind of paused, we didn't go to 40,000s or 35,000s. We paused, and there was not so much profit making last week, but there were also not losses made, simply because I adjusted the portfolio. And the first thing that you may notice is this is a beta weighted portfolio, right, on SPY. I basically neutralized the portfolio. So delta is like almost neutral, it's just 10, right? We are almost delta neutral, while Theta is still high, so we still have like $311 per day of Theta, while Delta, so the reaction of that portfolio on the SPY movement, up or down, if it goes by $1 up, we're making $10 plus on just, that win in price of SPY. If it goes down by $1, we lose just $10. So basically, it's very neutral. And finally, we're getting to ExxonMobil. ExxonMobil, if you look at the chart, it has been beaten up like crazy, okay? In the recent past weeks or even a month, it has been beaten up and been going down absolutely crazily. If you see the chart, this is the downtrend. It's a typical downtrend going down. Today and on Friday, it kind of like recovered, bounced back of the levels of 35s, which is the support zone. Next, support is its bottom, like in the 30s. So it's nice that it bounced. I didn't expect that it will go that low, but there were some negative news about oil industry, and prices of oil going down, OPEC having problems, and so on. And obviously, it influenced ExxonMobil trade and ExxonMobil as a company. Now it recovered a little bit, but I was in serious trouble when I was looking at these candles going down below 35, going 33-ish, 34, levels. I kind of said, what, I don't know if this is not going to go and reach the bottom. I'm not sure. I said if it drops below this support zone of 35, I'm going to manage this trade and I'm going to limit my losses. So what have I done? What have I done? Well, I created a position which is called and we're going to look at it now, synthetic short. And this is composed of those two trades which I just selected here. So what I did, I sold 10 calls at the level of 35 and I bought 10 puts at the level of 35. Why 10? Because we own 1,000 shares. That's the reason. So I need contracts which cover for all these 1,000 shares. And what kind of risk profile do I get if I have this kind of trades in it? And you see, my losses are capped at the level of $5,950, of course, minus the cash that I made on selling puts and calls. But in terms of just stock, the level at which I bought it, which was 40.75, and this short put, I'm kind of like losing on this $6,000. right now